A1trading.com. Get exclusive access to Chris Pulver's trades with A1 Trading's Pulver Alerts. Watch as Chris Pulver, a seasoned trading pro, navigates the markets, manages risk, and applies a disciplined trading process. Join today to level up your skills and learn from Chris's wealth of experience. Get Pulver Alerts now.
Good morning, everybody. Happy Friday. How we doing? Happy Friday. Put in the chat. Okay, sorry for running a few minutes behind, but we had another flush down. We gapped lower. We're trying to scramble back a little bit. Don't get excited about a rally here. I'm not. I think that the market's probably better off if we have any type of movement, like our high to this, FOMC plus a little fuel to the downside, gapping lower. PCE wasn't that impressive either. Nobody expected it to be. Look, I think this market is still due for another flush lower. Now, is that going to happen today or next week or the next 2 weeks? Probably not. And here's why. Low volume, limited trading hours. If the market puts in, the damage has been done, right? And so the FOMC move on Wednesday, plus a little bit of a retest of those lows, plus a gap lower today. I would say that this is probably our high to low that we're going to deal with here for the next couple of weeks. And if the market comes back in any way, you're going to have, if you want to call that a Santa rally, you can, because we're going up. But I don't think this Santa rally is coming back to hit all-time highs. Don't be surprised to see that there is another leg lower. Okay. And technically speaking, I kind of hope this happens, because that would be a lot more attractive to be looking to deploy capital early in 2025, as opposed to this thing pulls back here, right? And all of a sudden we're at all-time highs again. And this market did nothing more than like a little 3 to 4% dip. And everyone's been proven right of just buy the dip and just do nothing other than this market always goes up forever. Look, this little pullback, our April little pullback, I mean, it's right there with some of the biggest weeks we've seen as far as sell-offs go. I just don't have a lot of confidence that we're hitting all-time highs. I think that it was, again, we kind of go back to talk about the Fed for a second. Like, it was I don't know, like kind of it almost felt like a unscripted Jerome Powell on Wednesday. He got into tariffs, which I know when Nick and I were watching was unexpected. He spent a lot more time pretty much talking about how inflation is higher and stickier, and we made some progress, but it wasn't enough. We had softer employment, things are in line, but basically, here's why the market really reacted negatively to with FOMC. The market was already expecting like 3 to 4 cuts for 2025. And it was pretty definitive that after FOMC, or while the messaging was happening, the dot plot especially, that the Fed's looking at maybe 2 cuts. And so the market ran with that, right? All right. So anyway, that's where we're at. I hope we get some lower levels. I have NVIDIA, like, I guess I won't get assigned. If it's above 130 today at closing bell, then I don't get assigned. If it is, we'll see what it does. Let me just set a chart while I'm here. 130.25. See if it gets close to my strike. The ideal price for me with a ratio spread is the closer it is to 130. The closer it is to 130, but not actually closing below it, is my ideal ratio spread, where I get $4.57 per contract. But if it's below 130, I do take the shares. And I would own the shares around one. You can see it here. Well, I did have it 125. Right here, 125.43 be my break-even price if I own the shares. So I might not get the assignment on NVIDIA, and that's unfortunate. And then this is a credit spread out to next Friday. I don't know if this has what it takes to get up to 137 or 138 to get this a profit. I could also still maybe justify taking some shares and then putting on a collar trade. Because if I sell a call and buy a put and it doesn't cost me anything, if the stock goes up, I get called away and I can make some money. If the stock goes down, I've got protection to lower my cost basis, which would be fine. So I might still, if I don't get assigned today, I might end up taking some ownership on this 138 by 137. So I'm trying to think, like, should I do that now? No, I guess I haven't been assigned yet. Try a different browser. I don't know. That's a TradeView question. I'm on Microsoft Edge. If Chrome is crashing on you, then try Microsoft Edge or Firefox or something different. Okay. All right. So I'll be watching that. I also had one of my hedges pay out today. This was actually pretty nice. My trade here, I don't know if I put it in. I know it's in the Pulver Alert section. Let me try 608. Oops, let's go to the A1 trading. Let me try to type in 608. There it is. So I'm going to my Pulver Alerts right now. The 608 by 590. I'm issue a closing order. I already put in a closing order on that trade, and it got filled today. So this is a reply updating the Pulver Alert. So updated trade. SPY hedge, it was a 608 by 590 bear put spread, paid 425 debit, closed at 15.31 credit, filled on Friday's open. Nice hedge profit. Okay, so that trade worked out pretty nicely. 15.31 is my closing price, and 425 is what I paid for it. So 1106 out of the 425 debit. I just made 260% return on risk. Obviously, I'll take that anytime for a hedge. That's pretty nice. Okay, market's getting a little bit more directional. We'll see if we are just finding, yesterday's lows, and if there's any rejection there, or if this market's trying to claw its way back into chewing into this FOMC a little bit more. We'll see how directional today gets. So I'll keep an eye on that. What else? I'm still looking at a hedge on the QQQ. That one's out a little bit further. I should have looked at my, dang it. I should have looked at my SPY trades this morning. I had some out of the money puts. We take a look at this one here. So my SPY, 1, 2, and 3 profit. It's given some back. Son of a gun. I was curious. I should have been looking at this morning to see where it was trading this morning. It doesn't matter. I mean, it's an out of the money hedge. It cost me what, $300 to hedge, and if it works, it works. One of them is January 3rd. The other one is January 17th. The other one is January 31st. I still have a Q hedge in. This one is not closed out yet. QQQ, where are we at? Here. My 533 by 510, we're trading at 515. I mean, this should have about $18 of value. It's showing about $11 right now. I'm up a little bit of profit. So I paid 525. It's not bad. Question is, like, do I like it enough to get out of the trade right now, or do I want to hang on to it? Let's see. I can close out the hedge, which I think for the next couple weeks, let me see what this trade's for. So can I get like 10? If I get 100%, maybe it's worth protecting. This is kind of nice. Like, I'm up a little bit today. Let me see what this hedge looks like. So if I close out for 1070 and change, let me see what I paid for it originally. 1056 and 473. I think I paid $5 for it. 1073. Where we're at minus 473. Did I pay $6 for this? 1056 and 473. All right. 1076 minus 473. Oh my gosh, dude. I paid 583. All right, so I paid 583. I'd be wanting to get like over $11, but we are getting a little bit of a clawback directionally today. We're kind of breaking out of this opening bell range. Let me see what my SPX trade is doing. I might just take the small loss on it right now. It has already blown through my stop loss. Well, that was pointless. Canceling that. I guess at this point, I'm going to embrace the full risk. So I put on a trade this morning. Here's my expiration. So my call side is being threatened a little bit. Do I want to roll? Maybe. This is something a little silly here, but let me see. Game time decision. I might do a quick roll. Where's my SPX? SPX, if I do a quick roll on the puts, if I do a quick roll here, I would close these out for profit. And then here's the expected move. I roll these, see, lows on the SPX. I know I'm just talking out loud here. Just give me a second to walk through a trade. So center price, roll this up to around 58, maybe 58.20. That's way up there, but yeah, 58.20. Grab another 45 to 50 cents in that roll. I'll keep it down to like I'll try that. So if I get, let me see if I get 50 cents out of that roll. So I should be taking profit on the one put and then rolling it again, 45 or 50 cents. See if I get 50 cents for this roll. 52 cents, try to get 45 cents. Come on, man. Cancel that. Try to do another roll here. Put, close. Okay, look at a roll. No, man. Cancel this order. There. Now I can roll this. Quick roll. All right. Again, where to? 58.20 to 58.25. So roll this up to 58.20. I'm going to take a little bit of heat here, but 58.20 to 25 should be able to get 50 cents. Try this for 55 cents. 50 cents roll. The bid ask is a little wide. All right, just got filled on a 50-cent roll. So let me move this over here. Update on the trade. Broker. Stop at 100% premium. Didn't fill. So now I'm looking at the full 5 wide risk. All right, so I'll keep an eye on this one. We'll see what price does. I'm still in for the expected move. Oh, no, you idiot. Never mind. I just fudged this whole trade up. Son of a bee. Never mind. Crap. Well, it's probably okay, but it is annoying that I did that. I didn't even pay attention to the expiration. That's totally my bad. And that is a lesson in why you don't roll 0 DT. So we'll see what happens, but now I've got to go back to the 20th. There's my trade for today. Call side could still be threatened a little bit. It's defined risk. It's not a huge deal, but I need to see price fade down a little bit lower. And anyway, that'll be a fun one to manage. All right. It's Friday. It's been a good week. Honestly, it has been a good week despite the crazy sell-off. You know, I was positioned nicely for hedging. That's all good. The QQQ trade, I'm going to stay in this one a little bit longer. The SPY trade closed out, updated there in the Pulver report, or the Pulver report, the Pulver alerts. Where are we for the week? I think this is a dead cat bounce Santa rally. You know, we have a high. The market did some serious damage this week to the lows. It didn't. I mean, is this it? Like the market came back in and found a bit of this election gap. Is this going to come up? And this is why I say it's a dead cat bounce. Okay. So if we have high to low and it took out this level right here, we didn't quite fill the election gap all the way. But if we fail to make all-time highs, who can tell me what this pattern looks like at the top? What does that pattern look like? If we challenge that low, left tip, center tip, that's a crown pattern or some type of head and shoulders or crown pattern, right? It's a topping pattern that looks like we could have market struggling to get to all-time highs and then come in and fill this gap entirely and possibly come back and find the moving averages that I have been talking about. Okay. So for all of my cash deployments, I'm still not ready just to say this is the trade. Like I want to get levels down here. I want to get levels, at or below the 200 moving average if it will do it. We're still 280 some bars away. I think I built that right here. We're 285 bars away on the 200 moving average. So it's, to me, either this is like coming up to test the highs and we're going to stall up here, or we're still going to let this moving average catch up the price and we're going to find it. And then maybe the market can justify going higher. But I don't think this market just goes right up to highs without having divergence and then somehow coming back in for a flush in January. It just, obviously I can be dead wrong. But like I said, I think that we're going to hit moving average before we hit all-time highs. And that's on, Meta, that's on Nvidia, that's on the S&P, that's on a lot of stocks. I think we're going to have some type of pullback before, we get to all-time highs. So we're going to find out. All right, top down, let's go. RSP. So I got filled at 177.20. I'm not adding anything yet, but I'm watching. I've got a chart alarm set on my 200 moving average. Okay, all the equal weighted indexes like RSP and QQQE, they have been, actually, that's an interesting one. However, I will say this on the Nasdaq, equal weighted Nasdaq is probably not as interesting to me as equal weighted S&P. Just because I don't know if equal weighted Nasdaq is, I mean, it should include like Mag 7 stocks, but it's just they don't give them, 10% as Apple and 8% as Microsoft and 5 or 6% as Google. It's like it's just not heavily loaded towards like Mag 7. But the problem is if you have unprofitable tech, QQQE is not going to be a great trade, right? So I do have some trades in, like I put a small position in QQQE and RSP. Dow is finally coming back for the first time in a while. It's still, I mean, no offense to the Dow, but we came back to fill this election gap entirely, okay, which is impressive. This is also, I think we have a bit of a topping pattern in here. I think the Dow is not done. If we have another flush lower, all I'm looking for is symmetry here. High, low, lower, high, lower, low. Find the 200 moving average. Find the structural support off this, April bottom and this August bottom. And if we can get to the 200, that's great. We come back to a little bit of structural low on a fake out or bear trap. That's fine. Give us a, what's a correction here? Okay, that's a 9% correction. Structurally, that's a 12% correction. I would be okay with that. 9 to 12%. A 9 to 12% correction in the Dow gets me into this area. So between the 200 moving average and my structure from April and August, I like that spot. So I'm going to box that in and put this in green because I'm interested in buying there. So that will be green there. So I wouldn't mind looking at a buy trade there. Okay, Russell also bouncing, came right back to this wiped away how many months, right? We had our election, pre-election, post-election rip. We wiped all that away. I don't know. I looked at this one yesterday. Like, could I take a trade on this? It was just a lot of risk. I was looking at the Russell futures, trying to look at a trade. It just didn't look attractive enough. So I'm going to stay out of it for right now. Russell growth looks okay. I don't know what happened. There we go. I'll take a stab at the Russell growth if we come back deeper. A 144 or 200 push down. I'll probably buy some IWY, dollar cost averaging there. IWX, this is top 200 value. I don't know yet. To be determined, and honestly, I'd rather trade S&P value versus Russell value for right now. If I'm trading anything small cap, it'd be small cap growth as opposed to value. VIX, all your volatility sellers are doing okay today. SVXY, I'm actually very happy that I got out of this trade when I did. Once we got to these highs, I closed out a 55 and 54 and 53 put for profit. Those were all placed in during this vol push that we had in late July into August. Now I'm sitting on SVXY with like $35 puts, which are out of the money. They expired today. Dollar index, I don't know. Don't fight the dollar. Could this be a broadening pattern? Maybe. I could see a little bit of accumulation in here on the dollar. I just don't see the dollar being bearish. I mean, look, a pullback is fine, but I don't see the dollar pulling back necessarily below 105.50. So if you write something down on your dollar, the DXY 105.50. As long as we stay above that, I would be only focused on buying the dollar. Okay. And if this is the trade that causes a lot of pain and gets these forex positions stretched out where it's like, man, I can't believe how far the dollar went. That's perfect, because that means if you're patient and you're not getting smoked on the dollar right now, that means that we are going to have a monster trade on the dollar. And look, I will be the first in line to get ready to short the heck out of the dollar at a price level that's just so good. Okay. So why am I not taking positions now? It's like, look, I got a little stabs in there, right? I'm long Aussie dollar with a little small positions. I'm long New Zealand dollar. I'm not in euro dollar. I'm not in pound dollar. I think those are correlated a lot tighter to the DXY. If China picks up any slack and continues to kind of reassure the markets in Q1 of next year, Aussie could do well. Commodities could stabilize, do okay. I don't know. The carry trade situation, it's like the Fed's cut 100 basis points. The RBA is still holding tight at 4.35. The RBNZ is at 4.25. They're right there, kind of with a negligible swap, right? There's no real positive negative carry trade between Aussie dollar, New Zealand dollar, but there's certainly strong sentiment around the dollar. It's pushing higher. Like I said, the tricky pattern on this dollar index would be this bit of a broadening pattern where we've had this nice run up and now it's just going to form some consolidation. Okay, but like I said, if we don't really make a firm break below 105. Okay, if we're not below 105.50, I would not short this thing. Okay, so I just think that perhaps the surprise move in forex would be that this dollar is still positioned to go up, and we're going to get a magnificent short on this dollar at some point. But I do not want to be on the wrong side of this move trying to short the dollar early. Okay, so don't. Right, my stabs are very small. I can stomach the Aussie dollar going down to 5,500 would be okay. The New Zealand dollar going down to 5,000, I'd be okay with that. I'm not saying I want that to happen, but I can stomach that. Those are small trades. I can manage a single digit, maybe 1 to 3% drawdown, and I can see where the dollar ultimately ends up taking me. Okay, but point is, let's keep an eye on it. But I think the dollar right now, as long as we're above 105, the dollar index is probably likely to stay bid. Okay, oil's the same thing for the last couple of months. I don't know what it's going to do. Is the floor going to break, or is it going to go higher? This is also a bit of an inflation story in addition to geopolitical tensions. Oil just can't get a break. I think there's still that bear trap scenario where everyone gets faked out here and then it goes higher. That's probably my higher probability scenario, is that it's so well supported here that it just stays, but we could have a fake out. Unless there's some big change in supply and there's just a really aggressive move by possibly China, possibly the U.S. as far as production in the U.S., production in Saudi Arabia. You're still fighting against OPEC a little bit, but I just don't know. I don't know what oil wants to do. It's not something I'm interested in trading. I mentioned before, do we just do a strangle on oil? Maybe that's the best trade. But by the time I'm thinking about this now, it's like, what do I do? How far do I go out on oil? I don't know. And plus, it's like it's undefined risk. Unless I did like an iron condor on CL. Let me see this. So if I go CL and go out to, I don't know, how much oil are we gonna get a lot of movement before middle of January? Probably not. Like that first week of January. Let's see what January 3rd or the 10th looks like. Okay, January 10th. This is just a random trade that I'm gonna look at. But oil, if I were to sell like a $73, sell a 73. Let's just base this on the deltas. I'll go 15 delta. Okay. And I'll do a 15 delta on the put side as well. 15 delta put, 64.50. Okay. So this is why I wouldn't take the trade. I would risk $420 to make 80. Okay. And I'm not that excited about paying commissions. It's a futures trade, so I'm paying commissions. Plus, I've got my CBOE feed. I'm probably going after a partial profit, so maybe I make $40 to risk 420. It's a terrible trade, so I'm not going to take it. Anyway, so I just don't like it. There's nothing I'm going to do on CL or oil that I like. I did close out my trade earlier. I had a $69 by 68.50 bull call spread. I closed it out for like 52% profit. It was like a 52% of max profit, but I'd rather take it than deal with all this chop. Okay. Natural gas is still grinding higher. I'm not going to chase this thing. Just let it do whatever it wants to do. Gold, stabilizing, but still be prepared, right? Be prepared for an A, B, C, D on gold. I think we're coming down to 25 or 2400. I'm way more interested in establishing new positions at 25 or 2400. Probably getting long in 2025 on gold futures again and adding positions on GLD. If it goes higher, okay, fine. One thing that gold is probably I don't know, should potentially benefit from, like higher inflation should hopefully help gold. Dollar strength is probably the worst. That's probably the nemesis of gold right now. If the dollar gets stronger, gold is likely going to head lower. So that's one trade-off is the dollar index getting stronger and the dollar pair is getting stronger. Gold is probably facing more headwinds, right? Am I doing anything on either one? Nope. I'm just going to wait for the dollar to get me better positioning, and I'm going to wait for gold to hopefully line me up for better buy trades. If gold lines up here, great. I'll like buy trades there. Let's see some heavy bidding. Let's get back to all-time highs. If the dollar runs and gives us a super attractive level to sell it, then we look for confirmation and we have a great trade in 2025 on the dollar. Okay, gold, that's GC futures, GLD here. Credit spreads are in. That's out to 2026. I bought some additional shares. No big deal. Silver, what? This better be a bear trap. Coming back in to hopefully find some support. 200 moving average bounce. Hopefully we have that on silver. It's still very well supported at 26, but again, dollar strength. This is what I would like to say on silver. If silver goes up towards this level, challenges that high, I'm going to look at another accumulation zone for silver to try to get back up to 36. Right? So I want to see silver hopefully at this 200 moving average get back above firmly, work its way back up to these recent intermediate highs, and then any pullback here looking to add positions. I'll probably add some more SI futures or SLV credit spreads. Okay. All right. Bitcoin. Bitcoin had a little wick today down to 92. I said 90 to 80, right? 90 to 80,000. So 90 to 80. This is still my buy zone. So that's it. It's a lot of risk on, risk off. I mean, we've had a heck of a run on Bitcoin, obviously hitting the 100,000, hitting symmetry. If we have a high, low, lower, high, lower, low, which I hope we kind of do, then maybe we settle back into those levels I'm talking about, 90 to 80. And I'll add some exposure. Again, dollar cost averaging type trading, nothing crazy risky. Maybe an option trade on IBIT, maybe a partial ownership again, just throwing in another like $1,000 at it or something. That's it. BITO, glad I got out when I did on the call side. Now it's all cash secured puts, which are fine. I do want some shares of IBIT or BITO as well. IBIT getting a pullback, but I've already got trades in 52 and 51. Own the shares. You know what? I'm pretty happy with this. Look at this was the measured move. I measured symmetry on BTC. If it moves to 107, it did, and this is exactly where IBIT topped out as well. So there's a powerful example of symmetry, everybody. You measure moves, you calculate the percentages, and lo and behold, you get. I mean, that's pretty decent, right? We hit the exact symmetry level on Bitcoin. We hit the exact symmetry level on IBIT. This isn't like I just drew this now. It's like I've had this on my charts for months. So as far as profit taking, as far as measured moves, as far as getting to certain levels, it's kind of nice to see that happen. Okay. All right. MicroStrategy. Clawing back a little bit today. I've got a small position in on MicroStrategy at 372.50. We'll see. You know, this is essentially, like I said, trading Bitcoin. I'd like to see this. I mean, I measured my symmetry on this downward move. So A, B, C, D. If we get that, if we have a shallower pullback, then we're taking like this low and we're pulling back maybe like to a 127. This could be some type of like reversal pattern. But we'd have to see. I think we'd have to see Bitcoin hitting all-time highs again for MicroStrategy to even have a chance at all-time highs. Because when we hit this area over here, when MicroStrategy hit these all-time highs, it was way ahead of Bitcoin, right? Like Bitcoin wasn't at 100K when this thing was already making that run to 550 bucks. So it's just more volatile, you know. And if we get back to 107, 108,000, is MicroStrategy able to get back up to its highs? If it is the case, then I'm probably just going to take some profit. Take some profit there. That's going to be like a 60 to 70% gain. I'll take it. Okay, coin hanging in there. I closed out. This is a 220 by 230 bull call spread, as well as a 111. Don't fail on me too badly there, Coinbase, for the next couple of weeks at least. Ethereum, nice rejection off of the kind of pullback level pre-election. That's a nice little bounce. EETH, same thing, like hanging in there. I've got some expirations. Let me check my EETH really quickly. EETH. I'm going to check my expiration dates. So EETH, January 17th. So 60 by 45, 45 by 40, 40 by 35s, bunch of option trades. Essentially, my line in the sand is $60 by January 17th. So hopefully we're okay there. Copper, nothing. Japanese yen futures, not quite at the level that I want yet, but I will be watching. This is a spot that I wouldn't mind looking to get long. Okay. It's going to be a defined risk trade. I don't trade the yen much on currencies because I hate them, but I will trade Japanese yen futures. The Nikkei, still choppy, still garbage, right back in the middle of all that that fallout from July to August. Just watching. FXY is trading the Japanese yen. EWJ is trading the Nikkei. This one's down a little bit. So down about $5 a share on that one. I've got another dollar cost average level at $61. Maybe that gets filled. I mean, it's funny how this is not the Nikkei. Like I traded this because this one takes out the bottom 15% of the Nikkei 225. And I'm like, well, I mean, if we have a little bit more flight to quality with taking whatever it is, I mean, you take away 15%, you have 85% of the Nikkei. Hopefully it's okay. DXJ, that's another one. DAX. We had a decent pullback in Germany. We had that big capitulation move pulled back. This is a 50 moving average. I don't know. Keep an eye on this one. I still like deeper pullbacks. I mean, if you're looking to get long in anything, I'm just going to wait for deeper pullbacks. I hope we get them. If I'm wrong, I'm wrong. Maybe I'm too patient. Look at this rejection on the FTSE though. Oof. So that level. Maybe this is still a range trade on the FTSE. Maybe. We are certainly flirting with some major support breaking though. So I don't know. The further we get on the right hand side of the trend line, if we break that floor, like the FTSE could be heading way lower. Not yet. It might still hold up. If this gets back above here and has some thrust, maybe. But if we're a little softer in the U.S. market, I don't see us getting a lot of gains out of Europe and Germany, gains out of the UK. I mean, I don't see a lot of the global markets all of a sudden doing super well, despite all the readings we've seen, like the Case-Shiller showing that the U.S. is valued just extremely high compared to Euro stocks. Globally, it's like 63% of the total market cap in stocks is the U.S. right now. So I get it. Like if the value investors are looking for non-U.S. plays, but it's pretty much been a failed decade of trying to do that. So anyway, interesting support on FTSE. I have not traded this. I just thought over in this area is like, man, I really want to put in a defined risk like Iron Condor or Strangle. I didn't like. I still haven't looked hard enough to find an ETF to trade. So I haven't. Argentina, decent pullback. This is good. This is a country I would consider being bullish in 2025. I just want to see, can we get some better levels? Pulling back to the 50 period does not make me excited. So is it high, low, lower, high, lower, low, come back into a little bit more attractive zone, come back and find some type of structure in here, then I could get long Argentina. So that's what I will watch for there. What else? China, still pretty sideways. And like I had mentioned with some of the technicals here, with this big thrust up on the HSI, if this is A, B, C, D, or building this kind of support zone, so we have a potential like head and shoulders, potential head and shoulders. Now, the proof is in the pudding, right? If we have this as a head and shoulders for HSI, is this able to find its way back up to the neckline and, in fact, confirm and break the neckline? Because if it does, then yes, China looks a lot better moving forward. Maybe this is trade in, Q1, Q2 of next year. It's going to take some time, but if this HSI can start looking higher, then I'm sure the stocks that I look at for China, it's like 6 of them, but I'm sure they're going to start looking a little bit better. Okay. EWZ, this is Brazil. It's dirt cheap. I mean, we're back down to COVID levels now. So I don't know. I think I bought 100 shares of EWZ. I don't necessarily want to double down on that, but it's hard to argue with like 2020 lows and 2015 lows. So I will probably, if this chart alarm goes off, I'll probably look at a buy trade around like 20 bucks. Okay, there is a pretty decent dividend to it, although this has performed like garbage for the last 3 months. Terrible for the year and down 50% for the last 5 years. So I don't care about a 9% yield when we're down 50%. But it's beat up. It's a value play. I mean, it might be just throwing trash, throwing money in a dumpster, or it actually does become like a reasonable trade. I don't know. So this is probably more of a commodity play than anything else. I just think that there are some attractive levels in here, and I'm curious to see what the rotation looks like. If we do rotate out of like all things tech, if we're going to be restrictive, is there a deleveraging coming in the markets? I don't know. I mean, it's just a weird sentiment change since the election, right? Right now, it's like everyone is just so optimistic about like how much better 2025 is going to get. Maybe it is, but does that mean there's not risk? Does it mean there's no rotation? Like, I don't know. We'll find out. So anyway, if we come down, I'll put a chart alarm here. So 2150 is the COVID lows, and then consider adding to EWZ at 20 bucks and maybe put in a zebra trade. So I'll do it. That would be either I buy the shares or I do a synthetic play where I can take a fraction of the cost. So let me actually see what a zebra looks like right now on EWZ. EWZ, if I did I would consider like a leap on this one. I'm probably not taking this trade, but if I went out to January 16th of 2026 and I were to buy, let me flip this option chain. So I have shares at 28 bucks. Ugh. So if I bought it at 20, my break even is 24. If I did a 70 delta, so I'd buy that and do that twice, and then I'd sell a 50 delta. And I do that once. So the 25 I sell once. So that's a delta trade or a zebra trade, and that gives me basically a 100 delta long. And so it's basically like a synthetic trade. Now I could have the market right now for this would be, it cost me $784 to reflect 100 shares long with a full 100 delta. That's kind of the beautiful thing about this. So it's in the money. It's still trading like a 70 delta, but when price goes up, or if price goes up, as this increases, I'm running it as if I had the shares outright. So it's a synthetic way to take the trade. It's cheaper because rather than putting in $2,000 cash, I can get the same type of reaction by the market by only putting in $786. So that's why I like the trade. I just have to believe that we're going somewhere directionally, because obviously if I'm long an option, I want to see direction. Okay. All right. So anyway, that'll be something into next year if I like it, if that chart alarm goes off. Let's have a look at Mag 7 today. We'll go into some currency here in a little bit. I see your question on dollar yen. So Apple is, coming back a little bit today. Fine. We're not at all-time highs. Amazon got hit pretty hard this week. We're still chopping away. I still have some protection on Amazon. I'm prepared for, maybe a little bit more downside. I still do like Amazon. I mean, my gosh, if we pulled back into a 100 or 144 zone, or even the 200, obviously, I'm certainly interested in establishing some dollar cost averaging positions, so DCA. I'm interested in some options, so adding some options, and even doing like, OTM options, so out of the money. So like at the money options, dollar cost averaging, adding more shares, and doing some out of the money income trades. But yeah, I like Amazon. But if Amazon is on sale by 20%, I'm interested, or close to it. Google, pretty crazy rip. All my trades that I have on Google are going to be, out of the money right now. I got into those when they were chopping around 170. Meta, this is a bar count that I'm watching closely. I mean, Meta can probably tap the all-time highs. It's close enough, but I'm hoping based on this bar count, which I can show you right here. My bar count on Meta is 470 bars on the daily time frame. That's a healthy bar count. So, not saying that it can't hit all-time highs, but very similar to what I said on Nvidia, I just don't see us going too much higher without having either this go sideways where this catches up, or we actually do have a bigger, correction just to find it. So I don't know, but I'd say best case scenario would be this. Maybe we grind these slightly higher highs, but it's just barely getting there until either this thing catches up and we're so close to it that a pullback is a bounce, or we have a I don't know, or we have a high low, lower high, lower low, and then we're talking, getting some discounts. So I will be waiting on that. Microsoft. I'm happy I took profit on Microsoft. Maybe not a bad spot to get in, but I'm going to try to get a 410 level again. So maybe this is me being hopeful, but high, low, lower, high, lower, low. If that resets, try to get back to these highs. But there's some pretty good range levels here. So if I get up to these highs, I'd probably establish some positions around the 410 handle. We have that August 5th bottom all the way back around 390. So I'd say between 410, 390, I like that spot for Microsoft. Netflix, 907. Again, pretty big bar count. It's like 290. It's not an Nvidia, it's not a Meta, but are we going to get to $1,000 before we have a pullback? I don't know. Maybe. If it goes to $1,000, it's going without me. All I have are income trades. So I'm hoping again that maybe it's a little sideways here. And is that enough to just? I don't know. I'm probably not going to participate at all-time highs. If we get pullbacks, I'm interested. So high, low, lower, high, lower, low, I'm interested. Okay, any lower than that, I'm very interested. But if it is $1,000, it's that little upside for me compared to the risk of the downside is just not worth it. So probably going to stay out of it for right now. Nvidia looks like I'm not getting my assignment today if it stays above 130. It's okay. I'm still making $250 a contract. It's fine. This one I can still look at next week and maybe consider some ownership, or that might turn into profit as well. Tesla 441. I know Nick's got a cover call at 420, so he actually might get the shares called away. This is out to next Friday, I think, for Nick. So yeah, we'll see. I mean, we're bouncing back today on Friday. Berkshire threw in a position. This is a 415 by 410. This is a ratio spread. Should not be an issue. I mean, it's going out to Q1, but it should be an income trade. There's only like a 10% chance of getting assigned. If this thing just chops where we have a 144 moving average and it moves up a little bit, moves back down, I still like this one a lot at the 200. So it's still way out of the way from my price. But if it goes up, obviously we're going, maybe back up to the highs. Look at your chop. Look at your levels here. Maybe a broadening pattern on Berkshire Hathaway. And a lot of trades like this, if we see broadening patterns in 2025, it's going to be a trader's market. It's going to be a trader's market. So a, high to low, high to low, high to low, like that's a tricky pattern because all the buyers get all excited about all-time highs. But it's one of those odd situations where momentum isn't there. It's like every time you get a high, it's a fake out. Every time you get a low, it's a fake out. That's a good trader's environment, but it's a bad momentum environment. So I do wonder what 2025 is going to give us. Okay, bonds, 10-year, a little bit of a downward move, but we've had, I mean, this is nuts, right? 1, 2, 3, 4, 5, 6, 7, 8, 9. We've had 7 huge bullish candles. One that doesn't even count. It's a little red sliver there, and then today is slightly down. I'm still very skeptical of where this thing goes going into 2025. Unless this like sharply comes down. And by that I mean, like, look, the Fed's down 100 basis points from that point, and this thing is still 70 to 80, 90 basis points higher. That is my concern. So if we get like a sharp retreat in the 10-year, that would be pretty nice, just as a consumer. But something tells me that this makes the equities market get very, very top heavy. It broke the market once at 5%. Anything higher than that, we're in for a lot of pain ahead. It's just when. It's just, I don't know. But we know the market can kick the can down the road for a while. But if this stabilizes and comes back in here and goes sideways, okay, fine. Maybe it's not going higher necessarily, but man, the 10-year's been just the complete opposite of the Fed, which has been frustrating. So bonds are still down, and bonds made fresh lows, right? SHY made fresh lows on Wednesday. They're fighting back a little bit. I'm sure there's some bond traders out there that are liking this and like, oh man, I'm so excited about TLT. It's like, I'm not. I still think something breaks. We've been very, very lucky and fortunate to have this soft landing / no landing. And I don't know that we can always sustain that. I think the market can give us a break. I think the bond market's probably the closest thing to be a break. The bond market would probably break well before the equities market. Just my thoughts. So if the bond market is going to continue to wreak havoc on the 10-year yield and go higher, and bonds continue to hit fresh lows, that is going to weigh heavily on stocks. So just saying. All right, what else? I saw mortgage rates went up. Congratulations. Now houses are more expensive and your interest rate's higher. Cool. What else do we have here? 19.5% of S&P stocks above the 50 moving average. To me, this is a better indication of a buy signal if we get into the like $11 to $10 spot. That tends to coincide with at least a buying opportunity. It's not there yet, so I'll be a little patient. And this is above the 200 moving. So we have, I mean, you can see that this whole buy zone we've seen with about 70+% of stocks above the 200 moving average that is quickly eroded. Right now we have about 52% of stocks above the 200, but they're clearly getting challenged. So if you think about the crossovers like the 50 and the 200, if you have only 20% of stocks above the 50-day, well, it's if price is here and price is crossed over, you have a 50 period moving average and you have a 200 period moving average. This is showing that most stocks right now are in correction mode, right? If they're above the 200 but below the 50, that is correction mode, which is also why for capital that I want to deploy, I'm waiting. Because if we go into correction mode, we go from correction mode into potentially bear market, which would be, index wise, if we hit 20+%, that's bear market. If we hit double digits, 10%, that's correction mode. I mean, you could argue for the S&P or the Qs, like, even 5% is correction mode, 7% is correction mode. But anything like double digits is deep correction, bear market's 20%. So a lot of stocks in correction mode right now. So that's why I'm being patient on where this kind of all settles out. All right. And then this one, what I add here, here's the Nasdaq. Okay, so about 33% of Nasdaq stocks. Again, there's only 100 of them, but 33% of the Nasdaq above. If we zoom out here on a weekly, kind of get an idea of, when would it be appropriate to add some exposure on Nasdaq? Once we hit these, I mean, really, it's like $10. So I'll put $10. It's a pretty good indication of, if stocks are beat up. Let's see how this plays out, and also to the upside. I mean, I actually am surprised that for a bit of a sell indicator that we weren't quite there. But this is also just a showing of Mag 7, right? We didn't have, 80% of stocks above the 50-day moving average. Okay, fine. But it wasn't like every stock where that would be like a warning sign, because it wasn't every stock. It was just Mag 7. There's still a lot of unprofitable tech, unfortunately. But anyway, let's look at some of these recent bottoms. Okay, 2024 April. So that was, we had a sell off in the market in April of 2024. It was like it was like a 6 or 7% dip in the Nasdaq. So that was an opportunity to also buy. Back here in October, November 2023, great opportunity to buy. Okay, back here in October 2022, that was the bottom of that bear market. Great opportunity to buy. So yeah, it's a good indicator. That's it. All right, let's go to some currency pairs, and I'll start wrapping things up here in a little bit. Let's go dollar pairs first. Okay, Aussie dollar. Let's go to the daily chart. Like I said, I am willing to kind of ride out some of these. I do want to have a chart alarm. So if this dollar comes back and fills a pocket, then perhaps I can get my Aussie dollar out. So this is entry one. Let me use a black line here, or an arrow. So entry one at that line, entry two at that line. If entry one comes back in a profit, I'm just going to take it. Take profit on entry one, take profit on entry two, and net positive, and then be out. So I'm not looking to necessarily fight the dollar, right? And if I don't get it, like it just comes here and it's like a little tiny bounce, then it sells off more and sells off more. Fine, I'll take on more. I'm going to buy another little chunk at 60.20. Okay, so yeah, it's good. New Zealand dollar. New Zealand dollar. I am in level 2. I didn't get filled in that bottom spot yet. So 56.05 didn't fill. My bottom from Wednesday on this one is 56.20. I got a 56.05. So I could still get filled there. But right now, same type of thing. And I would say this, a profit target was going to be 6,000 to 60.50. I would be okay with this one getting back to profit. So if somehow this comes back into profit, comes back to like 58.50 or 58.60, I'll just take a break even here. So I'll just close that for a small gain or break even, and then this one's a winner, and then I didn't get filled at the bottom. So I'll take the profit. But I don't know. I mean, if this is just more to come and we've gone from, roughly 63.60 all the way down to 56, it's like that's a 700? That's a 700 pip move on the New Zealand dollar. Could it go further? Yeah, we could go. I mean, 1,000 pips on this currency pair would be big, right? If we did 1,000 pips and we sweep these lows, I think 1,000 pips would be a run, and then we start to bottom out, and then we start to get a move back. So I'm still willing to take on a little bit more heat. Could it be, all the way down to 5,000? I would hope not, but it could definitely be like a little manipulation of these lows. So I'll watch for that. But hopefully we just come back in, rebalance, get a break even trade, take a small profit, and don't have a huge drawdown. Okay, or at least like pip wise. It's not the percentages in dollars because I trade pretty small in Forex. All right, dollar CAD. I think I'm just gonna. It's like, do I take the profit? Should I take the profit? Does anything change on dollar CAD right now? I mean, my max profit was like 320. Yeah, I mean, I still got another $100 here. I mean, that translates into a pretty big amount of capital. It's like a 50 multiplier for my copies. So if I get another $108, yeah, I mean, it's another $5,000 if I just let it hit my profit target. And I still think it's very possible that we not just hit the measured move, but also get into this like 4,600. This is the 2016 and 2020 highs. So I'll just hang in there. I don't know. I'm going to be pretty mad, obviously, if I see this thing like really pulling back. So time will tell. All right, dollar Swiss. Dollar Swiss. If we get any pullbacks, I want to add to it. Trying to get this one to 92. Dollar yen. I don't know. Honestly, it's like the easiest trade for me on the dollar yen would be we have this high that the market should have some type of care about, and we have this low, right? That was a bear trap low. This could be a high that the market respects. Could this market set us up? And this would be a really nice pattern. I don't know if it's going to happen, but if we have this as a swing and then the market sets up some type of pattern here Wouldn't it be nice to have a nice technical trade in the yen and take a swing out of this? Yeah, it'd be nice. But something tells me that we could have, this and this and this and all the way back to the highs again. And it's a bit of the carry trade. And then this whole thing, just a matter of time. But if we end up making a bull trap up at these highs and then we fail, does it come all the way back down? Is 2025 going to be another deleveraging on the Japanese yen? Maybe. I don't know. So I tell traders, if you're trading the Japanese yen, just don't trade higher time frames for right now unless the pattern is so obvious you take a swing at it. But otherwise, just stick to an alignment. Get a 1 hour, get a 15-minute chart, get a 5-minute chart, and just freaking scalp all you want. If the 1 hour's up, then you look for the 15 and the 5 to be up and you scalp it. I mean, I've got robots that can do it, but I don't trust the technicals of the Japanese yen that often, right? I think this is a currency pair. This basket behaves a lot more fundamentally than it does technically, and I can see people argue for that because yes, over the years there's been great technical trades on the Japanese yen, but the problem is those technical trades take months and months and months to set up, which to me is not trading, right? Like you're waiting for a technical trade to set up, and to me that takes a long time. If you're trading anything technical, it's like, look, your momentum is up, so stay with it, right? So stay with it. But that's it. I really, outside of this range, which I think is a pretty key one, like that's a big range for the dollar yen. So either we still see more of the same, where this gets all the way back to the same resistance level, or if there is something here, then maybe there is a swing, maybe there is a head and shoulders, maybe there is a breakdown. But otherwise, I just expect the range. So I'll watch this level. I'd be interested in selling high if it confirms, or if I get like a swing pattern in here, I'd be interested in taking a stab at it with a defined risk trade to the downside. But right now, nothing. All right. Any other currency pairs you want to take a look at? I know we had some decent moves. We'll go to a currency strength. Currency strength is a little messy today. Wow, look at that from yesterday. Japanese yen, crazy week yesterday. Was that? Oh yeah, they didn't do anything to policy, did they? Should not have. I'm assuming they kept it the same. Yeah, still the same. So they didn't do anything. So monetary policy statement, I don't know. They had stuff to say, but that was the Japanese yen on Thursday. That's pretty weak. Okay, and then today, a lot of chop. A lot of chop today. All right, any other questions? Otherwise, I will leave you with this. The market's, buying the dip, I think. But when I say that, I don't know if there's enough. I mean, anything can happen, right? If we get to all-time highs again through the Santa rally the next 2 weeks, I would be pretty surprised. It can happen, but I am pretty skeptical of the sustainability of that run. If we get all the way back to these highs, something tells me that that is a bull trap waiting to happen, and then we have another flush coming. So just be prepared for a little bit of chop and a little bit. That's a lot of volatility, obviously, if that's what happens. Otherwise, this is the high to low that kind of was the initial flush, and then any type of rally here is going to be faded back down into maybe early to late January. All right. And if the market just gets the cleanse and purge over with, that's good. I'd rather have that than the market just trying to do everything it can just to fight and fight and fight and fight and fight. It's like just fall, just find a bar count, just find some levels. It's like I don't know. I'm not saying the market has to crash. It doesn't have to be like, the sky is falling, but I'd rather see an opportunity where we get some really, really good levels to buy. But I suppose it's like, yep, this could just offer dynamic support, dynamic support, dynamic support. The market can go sideways a little bit, and then it just does what? More of the same, So we're going to see what these bulls have. If they got some fight in them, then we'll see what this true Santa rally looks like. But based on that FOMC, I think the market is going to struggle to get all the way back to the FOMC candle. So we'll see. But still watching hedges, still watching positions, up on the day, and interesting week. So now it's going to leave us with this long wick, right? Look at that trade. So the candle itself, and I looked at this first thing this morning when we opened. I was in an earlier session. I was like, this candle is one of the largest candles we've seen all year. It was percentage-wise, it was equally as big as our April capitulation move, and it was a little bit larger than that post-Labor Day sell-off. Obviously, we had a much bigger sell-off in August when we had that August 5th bottom, but the issue was that was a Monday and it just ripped all week. But our big correction was July to August. Everybody knows that. For if you're summing up 2024, that's it. Little hiccup in April, big volatility scare in August, and then everything was just like, yeah, Super Bowl market, AI, semiconductors, Mag 7 can't be stopped. And even with this FOMC, it's like, okay, well, the market fought back. Is it enough? I don't know. We'll see. All right, I'll let you go. Have a great Friday. And next week, I'm not sure what the schedule looks like for next week. I will be Monday should be fine. Limited hours trading on Tuesday, the 24th. I think brokers close by 1 p.m. in the equities market. FOREX might be open, but super low volume. Trading is going to be a little light for the next couple of weeks with the holidays. I am probably out the 26th, 27th. We've got a baby on the way, and 26 is looking like the day. Unless it's earlier, then I'll let you guys know, A1 Trading and everybody. But we'll find out. So, all right, have a great Friday and a great weekend, and I'll see you Monday. Thanks, bye.
Thank you for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want to get put on the nice list this year? Then make sure you check out the A1 Stock Box. That's all for today, everyone. We'll see you tomorrow. Ho, 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 ho.